Yo, what's going on? It's your boy Chike Investing back here with another video for our YouTube channel. Okay, we're gonna be going over FOMC days, how to trade those. Okay, so today we didn't actually have FOMC come out, but we had FOMC meeting minutes. So there's particular things about this day that can be that can tend to happen when FOMC news comes out at 2 p.m. Things you got to watch out for, and so we're gonna be going over that in this video. This is a part of the daily NQ ES review series that we do on this channel. Okay, so basically every single day I'm posting a video where I'm going over price action for that day, right? Every single tradable day, and we're gonna go over the daily all the way down to the 1 minute. And you know, what's the point of doing that if you're not going to make money? So we trade the 2022 model here. That's the entry model from ICT. ICT says that this model is the one model that he would teach his daughter because how easy it is to spot this on the chart. Right now, we'll be going over the opportunities to see how you could have made money on a day like FOMC. We'll go over what are the characteristics of an FOMC day, right? As well as kind of toggle time frame by time frame to also go over daily buys as well. So we're hitting three major things in this video. Please stay around. If you're excited for that, press that like button. Thank you so much for pressing it. You're such a great person. Thanks for subscribing too, man. Appreciate you. And for pressing that notification bell. I wouldn't want to miss a single video either. You're goated for that. You're the goat. All right, so let's get into it. Now, starting off, I'll get into what the 22 model is. If you don't know what it is, now we'll get into that a little later in the video. But I want you to focus on a few things first. All right, so let's start with the daily time frame. So what do we have today? This is the next candle. So let's just focus on this candle right here. Okay, so this is today's candle on Tuesday. All right, so we took out the previous day low, and then we came back in the range. So when you're seeing this right in the morning, you're seeing us wick between this low, but on the daily profile, you want to have a higher time frame chart and looking at what's happening on the daily candle. We're going down like this. We're wicking, obviously taking out some short-term liquidity for what we call a continuation purge, right? So that basically means that where you think price is maybe shifting, we came to this daily CB level, right? Wicked into it, but closed back out of it and inside this daily CB here, right? And price came back and reversed down, took out this previous day low. However, you could have thought maybe that's going to be a market structure shift lower, but no, we're actually just purging some short-term, purging this previous day low to get some liquidity to come back in the range, right? So we're actually bullish, okay, on the day. So this is a bullish candle closing below the consequent encroachment of this daily, wick right here. Let's just make sure you see that. So you see we closed below the consequent encroachment. We didn't close through it. So if we closed through it, maybe we could have seen, price action that would have been more definitive of it going higher, taking out this previous day high maybe tomorrow. But we'll have to see how the next candle kind of plays out. Tomorrow's the day before Thanksgiving, so there may or may not be a lot of price action ahead of the Thanksgiving weekend. People might be wrapping up their trading, so we'll see. But my bias would be, if I put a gun to my head, we'd go higher because look, ES has clearly shown a willingness to continue to rise well past its daily CB levels, and NQ is acting a bit of a sixth sister right now, where price could continue to drag higher, but it's not doing well. So what would this also help you inform your trading? If you're seeing ES is much more bullish, you want to be looking for longs on ES. If you're seeing NQ is struggling to get there, then shorts are going to be way more viable, right? Like ES just moved a lot more today than NQ upward. So if you were looking for a long setup, ES would have been your guy, but NQ is better for shorts right now. That's something, it's a pro tip that you should keep in mind. Okay. So that's what's happening on the daily profile so far. You also see we've taken out the previous week low. We found some support on it, or previous week high. See, we found some support on it now with this candle as well. So that also would tell me that we're probably going higher as well. Finding some support on a key PD array like this, whenever you close on it and you use it to go higher, it's kind of like a propellant. Study that in your price action. You'll notice that signature when you close on top of something like this and you go higher, it kind of act like as a propellant. So a couple things that would scream bullish for me. Plus you have all these LRRs on top of here. Those are my objectives over the next couple of weeks. As we close out the year. Now, on the 4 hour, what do we have today? Okay, so overnight, we kind of consolidated inside this NWOG, right? This is a new week opening gap, right? The Friday's closed, Sunday's open. This is a new week opening gap. We closed in the bottom half of it until we skyrocketed through, closing above it, right? Tapping this daily CB right here, and this 4 hour Fair Value Gap, coming back in the range. But as you can see, we wicked lower to touch this order block right here. Well, this really this order block right here. And price actually still continued to go higher. And then on this candle here, we came back and wicked into this 4-hour Fair Value Gap. Really hard to see right here, but I actually took a short down into this BISI right here, expecting that to get filled. But then price rejected away and went higher, ended up taking this 4-hour candle high and ending off the day inside of this 4-hour CIBI. Now, going into the morning, what would be your objectives, right? So, we'll get into this a little bit later, but this candle is actually pretty predictable. Like this means like this candle was a little bit choppy right throughout the morning. And why would you have that? We'll get into that as we get into the lower time frames, right? On the 1 hour, all right. So on the 1 hour, we had this London low that formed during London, right? Coming back into this 1 hour FVG, which is really a BPR, right? So, going into the morning or going into London, heading into pre-market open, you can already see that we probably are going to be continuously having bullish price action throughout the day, even though we may have short-term reversals. Overall, we're pretty bullish. We're showing bullish price action, right? We inverted this 1 hour Fair Value Gap, came back into this 1 hour Fair Value Gap right here, and then went higher, closing above the new week opening gap, hovering above it, wicking into that daily CIBI, but then chopping around pretty much all the way until about 1 p.m. So in the PM session, because we chopped around in the AM, you saw some movement where we took out all this liquidity below here first, coming into that 4 hour Fair Value Gap, also this 1 hour Fair Value Gap right here as well. And then price expanded the opposite direction and closing on the about the consequent encroachment of this 4 hour CIBI, okay, creating a 1 hour bullish order block. Now, this is what we're going to talk about. Now that you can see the 15-minute, we're going to talk about something about when it comes to the FOMC days. So look at this price action. Trash. Like actual garbage. Okay? So it'd be very, very difficult. If you don't know what you're doing and what pulls liquidity you want to aim for, it'd be very difficult to trade in these kind of conditions, right? How could you anticipate this? Well, one, look at how much we moved during Asian, right? Like a 170-point move, right, during Asian. A lot of times when you see a large move overnight like this, right, you want to see overnight consolidate. When you see a large move like this overnight, AM session is typically going to be trash. And how could this extra be confirmed? In fact, there's even 3 things. The second thing is we have 2 p.m. news, right? FOMC meeting minutes at 2 p.m. There's a lot of volatility that can come with those meeting minutes, especially in these kind of conditions where everybody's unsure about what rates are doing and everything, right? So price is, chopping around because investors are not really sure about where price is going to go, right? And there's a lot of opportunity for manipulation and the algorithm to come in and screw you over in your day trading if you have no idea what you're doing, okay? Now, if you're a little bit more experienced, you can still trade in these conditions, catching short-term scalps, but it's probably going to be around the macro times where price is most likely to be trusted to actually move in one pool of liquidity versus the other. But if it's in a regular time frame, then probably not worth it. The third thing is also look at these PD arrays that we're in. Daily CIBI, 4 hour CIBI, 4 hour CIBI here as well. Like NWOG, like we're just bouncing between these PD arrays, right? This is very typical, especially in times where news is coming out later. We cannot just expand through any of these PD arrays. We'll tap one, come back, tap the other, come back, and you can see most of the bodies are just in the middle of the range, basically like a ping pong set, like a bouncing ball, right? So you got to be very, very careful. You notice conditions like this, and you're not, and you are not experienced. It's worthwhile to not even engage in this kind of price action. Now going into, so overnight we had this London low over here that formed. That's around the 1 hour BISI. Price came higher, right? Closing throughout this new week opening gap. And then going into, you left this low right here at 8:15 a.m. Going into 9:30, we spike higher. Tap this 4 hour CIBI again. Tap the daily CIBI consequent encroachment, come above it. Close back in the range. Start forming these choppy candles. Once you see these choppy candles forming in 15 minutes, it's already a sign that you should avoid trading the AM session, right? Unless you're absolutely experienced, especially 15-minute can be a really good gauge of how trash price action is going to be for the next hour or two. Price comes out and just takes out this 8:15 a.m. low, right? But then, comes back into the range. We don't really get any real movement until about 2 p.m. after the FOMC meeting minutes, right? Where we do have a short-term run in liquidity above this 130 high. And then we start to expand lower, aiming for this relatively AM equal lows. that these are my objectives for the day. I wanted to get, even though we were bullish, I'm experienced enough to know when we can have a run on liquidity intra-session and then head in the opposite direction, where this is kind of like a Judas swing, right? The first 30 minutes after the FOMC meeting minutes come out, and then price actually moves to the real direction after reacting off a 4-hour and a 1-hour fair value gap. And then this is not the high of the day, but closing around the consequent encroachment of this 9:45 a.m. wick. On the 5-minute, what do we have? Just a lot of mess, honestly. Just not even really worth it. Only thing I want to kind of highlight is these data highs, right? So this was a 10 a.m. news came out. There were data highs right here, and these are data lows below this wick. So you can see we took out that data lows, and we took out this 8:15 a.m. low. And then price started gravitating higher and took out the data highs, right? So these data highs and data lows, the wick that forms when there's data, can be very, very good runs on liquidity, right? And so once we took out these data lows, this data low right here, plus these lows over here, my next objective was going to be this data high wick, which you can see we just took out, and it came back in the range. Chopped around basically until about 2 p.m. after the FOMC meeting minutes, where we had this short-term run on liquidity, bearish order block formation, and then, how would I also known, right, that we're likely to come back down here? This area is too smooth. We just shallowly took this out. Like, when you see that happening, a lot of times that will get revisited, especially if we are not expanding higher, right? We're just gyrating around. Price is probably going to take this out before going anywhere. And plus, all these areas are so smooth right here. We took out these highs right here. And at this point, when we took out this high right here, at the FOMC meeting minutes, and we broke market structure lower on a 1 minute, I'm thinking that we're probably going to head down here because I already had a bias to take these out anyway. Come back into that 4-hour value gap that needed to get filled in on the 4-hour as well. So there's multiple, you want to always think about, where is price telling me there's multiple reasons to go there? And this is exactly it, right? Price then comes higher here. And then once we've taken out all this area right here, we still have relatively equal highs above here. And price is, obviously gyrating, right? So we're in consolidation mode. We took out one side of the consolidation. Now it's time to go on the other side, right? Especially after reacting a discount PD array that is very strong, like a 4-hour fair value gap, taking out all these equal lows, right? And, after the 2:30, that's when the real move happens, right? So Judas swing, real move happens. So multiple confluencing factors, all right? And they're making, the high for the PM session around 4 o'clock. Last time frame here, let's go over this real quickly. So you can see these data highs forming here a little bit more prominently, right? These relatively equal lows, if we had gotten a nice 22 model right here, I would have taken that, but we didn't. Price just ran all the way lower. Not very clean. I want to see a very easy, optimal entry. Plus, you have the 10 a.m. news, form this wick. Price comes and take out the low of that wick, takes out all these LRRs over here. Creates a double bottom kind of price action. Very interesting. Ends up taking out this liquidity on the data highs. So on days like this, you want to be focusing on, where's the liquidity resting? Where can we go back to? So we've taken out this side. Probably going to take out this side next. Come lower, right? And kind of gyrate. And then, once we're here in this 11:30, after 11:30, once we hit that macro, you could see a run on the opposite side of liquidity. But at this point, like, we have these relative equal lows here, and we have relative equal highs over here. I'm not really trusting anything until that 2 p.m. news, right? I didn't see anything clean that I would want to take. Only thing maybe is this 1, 2. So let's go over what the 22 model is, right? So you understand what the 22 model is. So you can see. So the 22 model is when you have a high. Sorry, you have this low right here that gets purged by this low. Then you have this high on this candle right here. Break of market structure. So you need to purge liquidity, break of market structure, fair value gap. So there's fair value gap right here, right? Fair value gap that forms here. And you want to see price return to the lowest hanging fruit discount PD array, which is this fair value gap right here, right? The fair value gap is to show displacement, and we head higher. Once you see price heading higher, move your stop below this low, because if it comes back in it, most of the time, like 80% of the time, it'll be a stop out, right? Where's your stop going to be? Probably below this breaker right here. Plus you have this inversion fair value gap, and you have consequent encroachment of this fair value gap right here as well, BVR. So 3 PD arrays plus this fair value gap up here. Price really should not be returning back down there. Put your stop here, let it ride, but then you would have got a short-term loss. Just because the 2 p.m. news is coming out, we've already done a lot this morning. We've taken out both sides of the liquidity. Probably just going to gyrate until 2 p.m. Right, and this is the real 22 model move of the day right here. We have this high right here, got purged out by this high, right? Break of market structure, return back to this fair value gap, right? And I actually got in this on a 2-minute. There's a 2-minute fair value gap that formed here that I got in on. And then price sells off, and we take out the AM low, which is what I was looking for, to return back to that 4-hour fair value gap. So that's order pairing combined with inefficiencies. And then you do have another 22 model that forms. You actually have one right here. 1, 2, 3. Right, purge of liquidity right here. Break of market structure by this high. Fair value gap. Set your entry right here. All right. Just because of the volatility, you could have set it at the high of the breaker and set your stop loss below the breaker. But because of experience, you'll know that basically just the way we're acting today, I probably would have waited to head to this fair value gap to get some better R to R. You get that entry, your stop can still be below the breaker, and price heads higher. You can aim for these relatively equal highs up here, plus these relatively equal highs right here as well. And you end up getting that. If you miss that first entry, there's a second entry right here, low, high, lower low, break of market structure, it's a fair value gap present. So you don't always need to wait for it to head to the fair value gap. Sometimes that fair value can get stayed open. So you want to aim for the lowest hanging fruit discounted rate, which is this breaker right here. Enter at the high of that, set your stop loss below the breaker, plus it's below the fair value gap, just in case it wants to spike back in there. You still would have got that entry, right? So that's 2 more opportunities just in case you missed the first one. This has been the daily review. Make sure you press that like button, comment what you want to learn next. Press that subscription button and press the notification bell. I'll see you guys in the next video.